Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. The London and St. Thomas Association of Realtors, LSTAR, released its October data this morning, showing that London's housing prices continue to surge upwards. This comes on the heels of an announcement from the Bank of Canada that we are to be expecting multiple interest rates as the months and years unfold and we start to recover from COVID. So it does appear as though the era of cheap money is coming to an end. So what I want to do today is go through the three key measures of the London real estate market going upwards last month. And then I want to have a brief talk about interest rates and what to expect and how that might affect London's real estate market. We are expecting more data out on the Canadian real estate market as a whole, as well as some inflation data that will be coming out from Stats Canada, which will have a direct impact on the timing of the interest rate hikes. So make sure you click like and subscribe to get those updates. But for now, let's get into the real estate data. So the first major metric showing that London's house prices have gone up is our average house price. For the first time ever, the average sale in London topped $650,000. This is only an $8,000 difference, but it is moving upwards, and we've moved up over and above that $650,000 mark for the first time in London's history. So I do think that's significant, and it does show a continued upward trend, as in September we saw that London regained all of the price surges that we've had in the previous 12 months. So we're definitely starting to see that upward trend beginning in September and continuing into October. And although $8,000 doesn't seem like much, the price surges become more apparent when we look at the median house price. The median sale price in London, that's where half as many of the homes sold were over this much and half were under this much. The median price rose from $603,000 in September all the way up to $621,000 in the month of October. So $8,000 difference, not a whole lot in the average price, but when we see the median sale price, we see that that's bumped up $18,000, which is significant. That's two big metrics that we see: average price and median house price both moving up, $8,000 and $18,000. It's definitely not leveling off the way that a lot of people had hoped for. And finally, the last metric indicating a surging housing market is the sales to list price ratio. So the sales to list price ratio, that's the ratio compared to what the house was listed at compared to what it sells at. So if the house was listed at $100K and sells for $110,000, then the sales to list price ratio is 110. When we look at the month of October, that number had gone up to 110.1. So not only do we have the average sale price going up and the median sale price going up, but we also see the amount that homes are going over asking price to be increasing as well. So we do see buyers getting a little bit more aggressive in the fall months than they were in September, and definitely much more aggressive than they were in August. So it definitely continues to be a seller's market out there, with more homes going for more money over asking price, and I think that's definitely borne out in the pricing data that we saw for October. With all of that said, the Bank of Canada came out last week and said, due to the inflation data that we're seeing, last month it was at 4.3%, and the bank expects it to hit 5% by December, that we can start to expect rate increases in the beginning to mid of 2022. A large part of the housing surge over the last few years has been attributed to massively low interest rates. So the idea is that as rates start to go up, there's going to be a lot of downward pressure put onto housing prices that Canadians have seen grown over the last year. So we might be seeing some of those downward pressures come to London, but I would definitely keep in mind that you're going to start to see throughout the news, throughout the country, that these downward pressures of rising interest rates, of decreased demand on the part of investors, and of a lack of affordability is going to be pushing down the Canadian real estate. That may not necessarily be the case for London. London has always been a special case because of our proximity to Toronto. Well, we've definitely never seen prices like this. People from Toronto are definitely accustomed to it, and their prices have been going up almost as much as ours over the past couple of years. With interest rates going up, we could still see an influx of buyers from Toronto with cash who are not affected by the rise in interest rates. They're not finance buyers, they're cash buyers. So while we will have some of that downward pressure put on our house prices, we have to remember that we do still have a lot of people from Toronto with cash that won't experience that downward pressure. I would expect that we will not see major surges in our pricing that we've seen over the last couple of years, but I would not expect a crash. With that said, there have been some predictions that the Bank of Canada will be raising rates up to 8 times over the next 2 years. So people that were paying 2% could be paying 4%, 2.5% to 4.5%, maybe 5% interest rates could become the norm. And we haven't seen surges in interest rates like that in some time. We also do not know exactly how the economy is going to look once we've had a sustained opening up of our economy, where everything's just starting to get back to normal as of right now. So we really don't know how everything is going to look. Hopefully there will be no more lockdowns, but again, we don't know that either. So right now we're still kind of in the information gathering phase. All things being equal, I think that our market will stay level, even with a couple of increases coming our way. But we still have to wait and see what the inflationary data is and when the Bank of Canada decides to hike those rates. Click like and subscribe to get those updates, and thanks so much for watching.